Yeah. Monthly pivots. Peace, 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 peace. All right. So I'm breaking down a swing trading strategy that will allow you to make money without taking on an extremely large amount of risk. Um, simple strategy. So um, we're using support and resistance levels established with monthly pivot ranges. So for those of y'all who taking my courses and are in my program, you understand the power of the pivots, daily pivots, weekly pivots, monthly pivots, yearly pivots. Depending on what time frame you on, will determine which pivots you decide to use. So this is a swing trade strategy. This is not a day trading strategy. Although you can use the pivots for day trading as we do. When you start to move to the bigger time frames, it's better for you to utilize just for swing trading strategies. Um, as you know, futures are trading futures is very risky because you're dealing with margin, you're dealing with leverage. At any given time, the market could gap up, gap down on you overnight, whatever the case may be. So doing this, it's suggested that you use micro contracts, not the minis. All right. So if I'm going to do this example with the S&P, for instance, we're going to be using the micro S&P. So if we look at the micro contract, just for you to for reference, all right, the micro contract for the S&P here is the specs for this. It's going to cost you about $1,100 per contract. All right, and each tick is $1.25. All right, so you have to gauge how many contracts you'll be able to trade at once. Me personally, I would probably try to put about 5 grand into this trade. So maybe 4 to 5 contracts at a time, and that will give you the ability to take profit at different levels. All right, so you can create cash flow if you're correct about your um, your direction and direction of trading. Also, when it comes to taking losses, your losses are going to be minimal compared to what you normally would make with a mini contract, which will enable you to take trades on a bigger time frame. All right, so taking trades on a bigger time frame allow you to have more patience and allow you to get bigger moves. So even though it's a smaller contract as far as the margin is concerned and the tick value, um, if you're holding trades for longer and you're anticipating a bigger move, it essentially will end up being a profit that makes a bigger difference. It's like a more easier or more stressless way of making income um, relative to what we were doing last year. Swing traded stocks, very similar to that, only you're dealing with margin. So this strategy could definitely be used to help you in more ways than one. So let's start out on the weekly chart, right? So we have the weekly chart here, S&P 500. All right, or always start out bigger time frame. And let me fix this a little bit, take that background off. All right. So as you can see, we have price barely touched the golden zone and bounced off of that. This little area right here, if you want to box this in, this is just consolidation. So there's no trend right here. All right, this is not a trend. So we could basically say from June 13th all the way up until now, there has been no direction in the market. It's just been sideways movement. All right. We don't like sideways moving markets. We like trends. But in this market, with the volatility that we've had, even with it not being in the trend on a bigger time frame, you're still able to make a large amount of money on a day-to-day basis because of the volatility that the market has. Big price swings on a day-to-day basis, on a weekly basis, give us the ability to make a large amount of money in a short period of time. So even though the market's not trending, there's still opportunities for us to make big money. So since we're in this area right here and we're just ranging, we know that at some point it's not going to continue to range. At some point it's going to break out. But how do we take advantage of this now without having to hold our money and wait until that happens? As we go down to a smaller time frame, well, first before I do that, understanding where we at as far as the levels are concerned, you can see we bounced off of the 38% level to the upside, and then we came down, pulled back, and now we're working our way up. So I'm gonna go down to the smaller time frame and measure this again. So we go down to the daily chart, and you can see the move that we're really paying attention to right now is right here. So all the way up, all the way to the top, boom, you see the pullback. All right, highlight the golden zone, which is the 50% to 618 level. That right there is the area where buyers started to establish itself. As you can see, got really choppy. All right, got really choppy in this area. That's the support area that was established by the buyers in the market, understanding that it's been on a 50% off discount from the run up starting October 13th all the way to December 13th. All right, you see how that worked? October 13th to December 13th. That right there is a small daily time frame upward trend. I can add a trend line to that, and you can see how that whole situation played out, right? So we can put the trend line on. We can do it like that. If you want to use the bodies. All right, that price sequence right there gave you a nice upward move for a pretty good amount of time. And then it broke to the downside, gave us a support level here at the 50% level. And then now we have another move to the upside. So take that off. So now we know where we're at. And then as far as the smaller time frame goes, we get down to the 4 hour chart. And you can see this is the other price sequence that we put the Fibonacci on. And we start from this area right here all the way up to this area. So we go from January 6th all the way to January 18th. All right. So before I get too far ahead, we want to imagine if you catch the price at the bottom here and trade the breakout and let that trend all the way up to the high, how many days do you have to hold that trade for? Let's say, for instance, you got in right here, traded all the way up to the high. That's 12 days. So in 12 days, you made 770 ticks. Let's do the math. All right. And it's getting to the point where we can see how much money could potentially be made. Remember, we're talking about trading micros now. So each tick is $1.25. So 770 times 125 is $962.50. So one contract in 12 days made you $962.5, right? That's passive income. Now, I just gave you an example and said 5 contracts. So multiply that by 5, and you're talking about $4,800 in 12 days. And that's just with one trade. So some of us day trade, right? You can make $4,800 on any given day, but you have to be very good at getting a great entry and catching it on a day where it's a huge trend, like today possibly, or Wednesday, and the market gives you a huge move in one direction. And obviously, there's a larger amount of risk because you're dealing with minis, right? So if you get stopped out on that occasion, you might end up maybe losing 600, 700, maybe $1,000. But there are opportunities that come about maybe once a week or maybe even once or twice a week where you can make $4,000 in one trade in a day. But that's using the minis. What about the micros, right? So when you're dealing with the micros, now you can swing trade because worst case scenario, you end up going long on a position and price gaps down on you overnight or whatever. Again, your risk is going to be a lot smaller compared to the minis because you're dealing with 1/10 of the value of the mini contract. So it's a lot easier for you to make that type of trade and hold it for a longer period of time and get the benefit that you want. And obviously, if you trade more contracts, you can have multiple take profit points and cash out on the way to your target, to the final target. So that price sequence right there could have been an easy $5 grand trade. So okay, we missed that. Now, if we go back to the daily, you can see that we're in a bearish channel. All right, we're in a bearish channel. All right. So with that being said, the key is using the monthly pivots, right? So if I put the monthly pivots on, obviously you can't see them because I got them marked off with lines. But the monthly pivot is right here where price just broke up from today. The monthly resistance level is up here. It looks like where price is headed. The monthly support level is down here, right? So let's go back and play this out. Remember, every new month, there's going to be a new set of pivots. All right. So your job is to figure out, first of all, understanding that strategy, knowing that the pivots are not going to give you direct targets, stop profits. Take profits and stop losses every single time. That doesn't mean that the market and the price is going to hit those levels every time, but it's a high possibility that it will. All right, because we're using previous price data and it put it into a calculation to give you those points each month, each week, each year, each day. So if we're focusing on the monthly, you already know by January 1st what the month is looking like as far as support and resistance. So you can mark down your charts like I did, right? With the assumption that if price is going to go bullish, more than likely it's going to hit both of these lines, right? If the price goes bearish, it's more than likely going to hit the support line down here. That's what we're going to assume. Now, from that, all you have to do is figure out a method to get you into a position. All right, so whether you're using a moving average, whether you're waiting for a chart pattern, whatever the case may be, that's what you're looking for. So in this case, what I'm looking at is support and resistance based on the trend lines. I got this area right here where price bounced, and I got this area right here where price is resisting or showing support. I put a trend line down, and then obviously we zoomed out. We already had the channel already here. So that one right there, by the time we get to January 3rd, I already know the pivot is here, resistance is here, support is here. I'm going to trade to one of these lines. Now I just have to wait for a signal to put me in there. If price breaks this trend line to the downside, I'm going to short this from the trend line all the way to support. That's 500 ticks. All right, 500 ticks, do the math. 500 ticks, multiply that by $1.25. That's $625. We do 5 contracts. That's a $3,000 trade. All right, and it may take you maybe 2 weeks. Okay, what if price bounces off this trend line to the upside? Well, if it bounces off, and I take the entry at the high of this candle, maybe I trade it to the pivot. Maybe I trade it all the way up to resistance. That's 794 ticks. 794 ticks. Do the math on that. 794 times 125. All right, that's 992. Multiply that by 5. That's 4,900. So five grand. So either way, I'm gonna make 3 grand or make 5 grand. All right. Now, what do you do about risk? If you're a Fibonacci trader, which I am, you can use the Fibonacci to help you with your risk. So let's just say, for instance, I want to take this long position, and I'm going to take it at the high of this candle. Where's my stop loss going to be? A safe stop loss would be uh, at the bottom of the golden zone, and the target would be up here at resistance. If I can get a situation like that, I would want to have a 2-to-1 risk reward ratio if possible. A 5-to-1 is best. Paul Tudor Jones, 5-to-1 risk reward ratio is where you want to be. But if you can't manage that, a 2-to-1 is acceptable. So the idea is to try to get in at the best entry as possible. So this is the position I'm starting with. But that's not the position that I'm going to actually take. This is like this position that I'm going to start with on the chart. My job is to go down to a smaller time frame and figure out how to get in at a tighter entry, right? So as I go down to smaller time frames, I'm trying to get in at a closer price so that I could make this risk to reward ratio better. All right, but I'm going to keep my target and I'm going to keep my stop loss. All right. Also, because you're using the Fibonacci retracement tool, even though we have a monthly resistance level here, and that's a good area to take profit at, if you're using the fib, realistically, you should be looking to take profit at the previous high. All right, but we're just going to use this pivot for the sake of this breakdown, right? So now take the fib off. We understand where the price is at. Now we're going to go down to a smaller time frame and figure out how to get into this trade. We're assuming that it's going to go bullish. Even though we're in a bearish channel and it's a high possibility for it to break down to the downside, if we want to play both sides, we simply do the same thing that we established before. Now in this case, let's say for instance I have the fib on here and I think that it's a possibility that it may break to the downside. What do I do on that? Same type of scenario. So what I would be looking to do is I would be looking to take an entry as price breaks through the golden zone. Because remember, if it breaks through the golden zone, it's a high possibility that it will probably drop down to the 786. And if it drops to the 786, that is definitely no longer a bullish trend for the most part. So from this aspect, since the monthly support level will be so close to my entry, I can't really use that as my target. All right. So I would either have to trade this all the way to the previous low and use the top of the golden zone as my stop loss. All right. Or I would just have to pass up on that opportunity and wait for a better one. So that you kind of have to make your mind up on what direction you want to trade. But you don't have to do that. You'll let the market tell you. You're not gonna make assumptions. You want to measure it up, but you'll let the market tell you where it's going. But you prepare for both. All right. So as we go down to a 4-hour chart, now we get to kind of look and see how I can get my position, how I can get a better opportunity at getting into this position. All right. So with that being said, let's just look at the worst case scenario. Worst case scenario, I have to take this exact trade with this exact position. Let's calculate how much money I would lose if I'm wrong, right? 579 ticks. We got to do the math. 579 times $1.25 is 723.75. Multiply that by 5. That's 3,600. So you're going to lose $3,600 if you use this exact position and you're wrong. I don't want to do it like that. If I can, I would want to cut this in half at least, right? Which will initially give me an even higher profit potential. So that's what we're getting at now. Now I got to work my way down from here. What do I do to work my way down from here? Well, one of the things I like to do is I like to use moving averages. The reason being is because moving averages are like something that you can use to help give you an average calculation on price and what experienced traders call mean reversion. This would be like the mean for me. So as price gets farther and farther away from this 50, I know that at some point it's going to pull back to it and test it. So with mean reversion strategies, what people like to do is they like to go against the market, assuming that it was going to go back to the mean and revert back to the mean at some point. So if I'm using the 50-day moving average as my mean or my average for price, that's essentially saying that I think that price is that's where price should be. Like that's the right price over the course of 50 days or whatever. The farther it gets away from that, no matter what direction it is, I am going to try to trade back to that. And I also use the RSI to help me understand when price gets too extreme. So let's say, for instance, the price is in a downward trend and the 50 day is right here in this white line right here, right? Once it gets to oversold territory on the RSI, I'm going to start looking at doing a mean reversion strategy to trade the price back to the 50-day moving average. All right. And the RSI is my signal to do that. All right. That's just, a strategy that you guys could play around with. But as I'm on the 4 hour chart, I'm looking at how price is respecting this 50. You see how it get up to the 50 and drop, get up to the 50 and drop, get to the 50, break over it, drop down, broke over it on the top side of it. All right, a few times and it came back down. That's letting me know that the 50 is the resistance, and it's showing me that price is trying to break above the resistance. It finally broke above, and then it got pushed back down. It broke above again and got higher this time, and it got pushed back down. But when it came back down, where did it stop? We already established that this is the golden zone of the fib, where everybody likes to buy. Experienced buyers like to buy 50% off discount. We also established that there's a trend line from all the way back here on October 13th. Price is respecting it. It's not breaking through. So at this point, you start to see the price get squeezed between the trend line and the 50-day moving average. Which one of these is getting weaker? To me, the 50-day is getting weaker because price is broken above it multiple times. Even though price keeps testing this trend line, it's not breaking through it. It only broke through a little bit right here, and it just ended up with 2 wicks. We got real bodies above this 50 finally. So to me, it's a clear signal that the price wants to go to the upside. Plus, we have the Fibonacci showing us that it's possibly being an uptrend because price is stopping at the 50% level. So, with all that being said, I can now use the 50-day as my entry. So I could push my entry down here. Now, just by doing that, I've already helped my risk to reward ratio by a lot. I'm almost at a 2-to-1 risk to reward ratio by doing that. Now, my risk is 462. It was around 500. Now it's at 462. So now let's do the math and see how much we dropped off from our overall risk. All right, 125, boom. Now we have 577.5 per contract. Multiply that by 5. Now we only risking 2887. We was almost risking 4 bands. Now we only risk a little less than 3,000. We're going to try to see if we can do better, right? So with that being said, now we got to look at support because I got my entry now. I know where I'm going to buy it. What about support, right? Well, I just showed you that we had the golden zone. That's where we started point at. But as we go down to a smaller time frame, you can see how price is rejecting this trend line every time. So if I'm going to use this squeeze situation going on right here, and I'm seeing more weakness on the 50 than I am on the trend line, I can just use the trend line as my stop loss. So I can move this up tighter now. Now I just reduced my risk to 270 ticks. Risk reward is now 3.36. Now we talking. Now we talking. So now let's do the math. 270 ticks on my stop. Multiply that by $1.25. Now we got 337.50. Multiply that by 5. Now we're only risking $1,687. We went down from almost 4 grand, all the way from 4 grand down to $1,687.50. And now, because of that, we increased our profit potential at the same time. So now, look at our profit target. Now we at 906 for our profit target, where we was at like 500 or even 700. Now we got 900. So 906 times $1.25 is $1,132.50. Multiply that by 5. That's $5,600. So we're risking like 1,600 to make 5,600. That's a very, very good situation to be in, right? That's the type of trade that we want to take. Now, let's see if we can make it even better. Let's go down to the 1 hour and see what's happening on the 1 hour. So we get down to the 1 hour chart, and you can see this is how we make money on a day-to-day basis. The 1 hour chart, huge price moves up and down on a day-to-day basis. We eat through all of this. So even though the market is consolidating and it's not trending, we can eat on all day with these up and down moves, right? So now, once all that's established, we get down to the 1 hour chart, and you can see how price is bouncing off support. We can bring this down even more now. Boom. Now, depending on what time of the day you at, right here, this is noon. So you see that this is the last test of this trend line happening in the morning. You ready to buy. So even though you may be shorting this as a day trader, long term, you're looking at a swing trade opportunity. I'm gearing up for a long position for a swing. If price breaks through this trend line, then maybe we look for a short. But if price bounces off this trend line to the upside, I'm prepared for the long, right? Now, as price gets down to this trend line and starts to bounce, I can start to establish a position earlier, especially when you're looking at the chart pattern and you can see a bullish engulfing candle right here. So you got that bullish engulfing candle on the 1 hour. I'm taking that entry right there. So now let's do the math. Now we have a 7-to-1 risk reward ratio, 139 tick stop loss, and a 1,037 tick take profit. Let's do the math. Let's do the math. 139 is the loss, max loss. All right, 139 times 100. I'm sorry, $1.25. That's $173.75 per contract. Multiply that by 5. That's $868.75 that I'm willing to lose on this trade. Some of you guys take that loss on a day trade. We're talking about a swing trade, which usually takes a little longer for you to actually see that. That's the max loss. What about the max gain? 1,037. 1,037 times $1.25. Boom. That's $1,296.25 times 5. That's $6,400. So you're risking $800 to make $6,000. You're risking $800 to make $6,400. That's better. It's getting better and better and better. Now I'm not going to go any lower than the 1 hour time frame because I don't think it's necessary. But you can. So let's see how this played out because it might not work. It might not work. It might not work. Let's see if it played out. All right. So boom, you have 5 contracts, right? So that means you have 5 potential targets, right? You got the ability to choose where your targets are going to be, but you got to make sure you pay yourself as you see success. So one thing that we like to do is we like to lock in profit when things are working in our favor. But with swing trading, you got to be patient when you lock in profit because you could end up in a situation like this where you have price working for you and then price comes back and tests your entry and leaves you with a wick. If you lock in your profit too early, you could get taken out of this trade and miss the overall move. So you want to be careful about that. But once you take your entry, it's time to start backing up out of there and going back to the bigger time frame because you want to have a bigger time frame mindset when you're taking this trade. Reason being is because if you monitor it on the trade on the time frame that you took the entry, you're going to make your decisions based on this chart. You don't want to make your exit decisions based on this chart. All right. You want to make your decisions based on the original chart that you used to actually start establishing this position. So we move out to the 4 hour chart and you can see you got to wait. For every 4 hour candle, you monitor it. Every daily candle, you monitor it. And on a daily chart, you might be looking a little concerned, right? But you did your calculations on the smaller time frame and you're prepared for the worst case scenario. You already got your risk established. All right. So let's see it play out on a bigger time frame. Now you dealt with a little bit of drawdown. but that's okay. It ended up taking off. So you got in on January 3rd, and you wasn't able to see any real gain until Friday, January 6th. So on the 3rd, on Tuesday, and then held it all the way to Friday, which is today, or not today, but the 6th. So if we look at the time frame or the time span, you had to wait 3 days, 2 days. You had to wait. I think that's reasonable to wait 2 days to see this type of move. So now the move has gone now. Now you can lock in profit. You hit your first target. The first target was the monthly pivot. All right, boom, you hit that. So now let's do the math from here. Let's go from the entry all the way to the, matter of fact, let me use the whole situation. So from the entry all the way to the first target, that's 419 ticks. That took 5 days. All right, 5 days, 419 ticks. Multiply that by $1.25. That's $523. That's $100 a day average per contract. You got 5 of those. How many are you going to take profit with? Me personally, I will probably cash out maybe 2 of those on that first target because you really only got 2 targets. You got the monthly pivot and the monthly, well, I would say the monthly pivot, the monthly resistance level 1, and if you want to take it to the Fibonacci high or the monthly resistance level 2, then that would be your last target if you wanted to let your runner run. So maybe 3 targets, 5 contracts. You got to divvy them up however you see fit. Me personally, I would probably take 2 of them off on that first target, take 2 of them off on the second target, and let the last one go. That's how I would play it out, right? So the first 2, boom, I'm taking profit right there. So now I multiply that by 2. That's $1,000. You made $1,000 in 5 days on the swing trade, and you ain't really had to do much work, and it was minimal risk compared to what you might be doing on a day-to-day basis for day traders. All the trades that you take in a day, you might probably end up putting more than $800 at risk. I only had to put $800 at risk one time, and I held it for 5 days, and that was the end. That was the end result for the first one. So that's the first target. Now you also got to make sure that you're monitoring the trade as it continues to go. All right, so we understand the 50-day moving average kind of helps us with the Fibonacci too. So you got price crossing through the 50 to the downside. Every time you have a downward trend or upward trend, you got to get ready for a fib retracement measurement. When it crosses back over the 50, that's giving us a sign that we need to put that fib on the measure. So that's a 38% retracement. High possibility for price to reverse and drop from here, because if it's a downward trend, this is the area where people are going to start establishing short positions, and up here around this area as well. Maybe price will make it through there, maybe it won't. I'm anticipating that I take profit here and I lock in profit. So worst case scenario, if this is a pullback for a downward trend and we push to the downside, I'm not going to lose any money. I don't have any risk on the table at all right now because I locked in profit and I already paid myself. So worst case scenario, I walk away with over $1,000. I'm cool with that. I'm cool with that. But we want to make sure we understand all the possibilities as the trade continues to work, right? So we took profit already. Now we continue to see what's happening. Price pulls back. All right. So now, how do you respond? What do you do? Smaller time frame, put the fib on that move, and it's better if you go to the 1-hour chart. 1-hour chart is showing you that's a fib move right there. Boom, it dropped down to the golden zone. For day traders, you might be day trading this. You might see this and say, okay, boom, I'm about to day trade this. So now you multiplying your money and taking advantage of the bigger move. So now you are exponentially growing your account by utilizing a slower method with swing trading and combining that with day trading, using the concept of trend trading while you're in the trend. When you're actually in the trend, you have money in this trend, and you're using day trading strategies while you're in the trend. So now on a day trade, you see that pullback, you lock in profit, so you're not tripping. You already made $1,000 on that. But what about this day trade right here? You got pullback with a double bottom at the golden zone. 8 o'clock in the morning, it pushes up. You hit it, you enter on the neckline, and you trade it all the way up to the previous high. That right there is a 236 tick move for the day. So on top of the 1,000 that you just made for the swing trade, you can jump in with a day trade and make an additional 236 ticks with micros or with the regular contracts. For the day traders, you're probably going to use regular contracts for this, the minis. You multiply that by $12.50. Now you just made almost $3,000 on that day trade on top of the 1,000 that you just made on the swing trade. So now you pretty much up 4 bands right now. And it's just all one direction, right? So now maybe you take that trade, maybe you don't. Maybe you take that one, maybe you don't. All right, it's not necessary. You're already getting the win. You don't have to be greedy, but it's a possibility. All right, it's a possibility. So now we zoom out and we're going to continue to let this play out. See how it works. We're trying to get to the second target now. Boom. Okay, so now look, we up here in this range, right? We already know that it's a possibility that price may not actually break through this area right here. We already took profit right here. Price comes back to test this level. When you already locked in profit back here, you really don't care what happens next, to be honest, because you already won. But you don't want to exit this until it gets you out with a stop or a target. All right. Reason being is because if you let this drop right here get you nervous and close out, and it doesn't actually it doesn't actually break through, you're gonna miss the opportunity to actually get everything you came for. So you gotta have some type of patience, and the Fibonacci allows you to do that. So again, we got another move here, bigger time frame. From here to here, and the 50-day moving average gives you the signal where you need to be putting the fib on. It broke through the 50, so we put the fib on. Now you got the 38% level here and the golden zone down here. Even if it does break through the pivot, the monthly pivot area, I'm not going to look to close out unless it breaks through this golden zone down here. This is the last area I'm going to be looking to close my trade. If it doesn't break through that, then I'm not closing. You could even put your stop loss up here at the 786 level if you want. So now you lock in more money. But you still got 3 contracts left. In this scenario, you still got 3 contracts left. So what do? You wait. So boom, you see price drop all the way down to the golden zone. It didn't break through. It actually rejected and went back up. So now you're still in the trade. You didn't lose out on anything. You didn't get shaken out of your position. You wasn't flustered. You wasn't worried about it. You locked in profit at the 786 level and you let it go. You let it go, right? So now we get to see how everything played out today. And as you can see today, you up, and it looks like it might continue to go up. All right. So if we just do the math from the day we entered all the way to where it's at right now, where would your P&L be currently? You up 595 ticks on 3 contracts. You already took profit on 2, so 595 times 125. My bad. 125 equals 743. Multiply that by 3. So you up $2,231.25 plus the $1,000 or more that you took profit on with the other 2 contracts. So technically, your P&L is up $3,200 with the swing trade, and that's 19 days. So this is a monthly swing trade strategy. Each contract is 3 months expiration. So you don't have to worry about the contract expiring on you or anything like that. You just got to pay attention to the expiration date and know what you're dealing with. But this is a month-to-month situation. So next month, you're going to get new pivots. If there's a pattern that you can detect and you can understand support and resistance, you could play that out for next month. This month is, pretty much over with as far as the strategy is concerned. Um, and I'm not saying that you can't have an opportunity to trade it because you still have a monthly resistance level that hasn't been hit. So there's a possibility that we can either break through this trend line to the upside, and now you have a good amount of potential gain to get from there, and that's about 376 ticks until that, or the price could double top and reject and drop through here all the way down to the support level down here, which will give you an even bigger trade opportunity if that were to happen. Now you're talking about $1,300 to the down. I'm sorry, 1,300 ticks to the downside. So the month ain't over with. Anything can happen from now until the end of the month. But for the people who are able to get in on this position, it's playing out very, very well. So this is a strategy that you can use for swing trading. And again, I only suggest you do this with micros. I do not suggest you do this with minis because anything can happen with the minis. And yes, it could be a lot more money. You multiplying whatever we just showed you by 10. So whether you up $3,000, you might be up 30,000 if you're using the minis. But that's a bigger loss if things don't work out. So to be safer, you want to use the micros, and then you just have multiple contracts to get the gain that you're looking to get. All right. So that's the strategy right there. And then for the people who come late to the party, you can easily put yourself in a position to catch these type of moves on a 4-hour chart. You see the pullback, boom. You coming in with an entry here. All right, use the fib. Boom. So now you got a play right there. Same type of situation. You want to enter here. All right, enter somewhere there. Put the stop loss below the golden zone if you can. Right? And trade that all the way up to the previous high, or trade it all the way up to resistance. And you're still able to get a very, very good swing trade going with minimal risk because you're using micros. You know what I mean? So that's the strategy right there. That was an example with ES. I'm gonna do another example with NASDAQ, and then we're gonna close it out. And I'm gonna do a little. It's gonna move a little faster with the NASDAQ, since we already broke down the basis of how this strategy goes. All right, so let's look at the NASDAQ. The NASDAQ, same type of scenario. We got our monthly pivot structures and levels marked off already. Weekly chart, we already know what's going on. If I were to put the fib on here, we would see the price in the golden zone. We got a double bottom right there. We already understand that. We go down to the daily chart. You can see there's a pennant, not a pennant, but a triangle wedge pattern going on right here. So we already know where the support levels is at, right? If I were looking at this scenario, I would be looking to take my entry somewhere at the rejection of this support level. If you're not going to break through the downside, then I'll assume that you're going to reject to the upside. And if I were to do that, I would play it out just like that. And then I would go down to the 4-hour chart. And I would see that it's a double bottom situation. So possibly get myself into this right when price crosses over to 50, and then try to get my stop loss up in that range. And then obviously I would have a target at the monthly resistance level. All right, boom. That would be my starting position. And then I will go down to the 1-hour chart and see if I could get something better on the entry. And as you can see, that day was a little hectic. We got an upward move here, another move to the downside, and then a break to the upside. So I would probably have gotten my entry around 9 o'clock. So that 9 o'clock candle breaking above the 50 right there probably would have been my entry. And with that, I would have had a 696 tick stop loss with NASDAQ. On the micros, we're talking about, let me make sure you guys see this because I don't want to lose you. Very important that you understand the specifications of these contracts. So the NASDAQ is different. The micro NASDAQ, 1700, a little bit more expensive than the ES, and it's less tick value. So the tick size is going to be 50 cents. All right. But the NASDAQ moves with so much more volatility than the S&P, you end up actually getting more bang for your buck when you talk about volatility, even though the numbers don't give you the same type of look that S&P gives you. So let's do the math. So 696 tick stop loss, multiply that by 50 cents, right? And I'm gonna do 5 contracts of that too. That's $1,700 stop loss. That's pretty good for the NASDAQ. All right, 1,700. What is my actual take profit? My take profit is 44,359 ticks. 4,359 ticks times 50 cents per tick is $2,000. Multiply that by 5. That's 10 bands. So I'm risking 1,700 to make almost $11,000. That's crazy. Understand that the example I gave you with the S&P, we had like a 7-to-1 risk to reward by the time we got down to our entry, and we was only going to make like $5,000, $6,000. Now we get to the NASDAQ and we have a less risk to reward. We got a 6-to-1 risk to reward ratio, but this one is giving you almost $11,000 profit. Now you understand, even though the tick value is a whole lot less, the volatility gives you so much more. So you make up for it, right? So now we get on this entry with that double bottom, enter on market open after that last rejection of support. We jump in after it crosses over to 50. Once we take our entry, we zoom out, move to the 4-hour chart. As price is holding up support of the 50-day moving average, boom, first target is hit. You hit that first target in 3 days. 1,838 ticks. All right, 1,838. Multiply that by 50 cents. That's $919. You're probably gonna take 2 of those contracts off. So you make $1,800 in 3 days on that swing, and you still got 3 contracts left. Second target would either be the monthly resistance level or the trend line if you think price is gonna reject. All right, boom. You still in there. Same type of situation. Price gets to the resistance trend line and rejects. We put the fib on the move. As you can see, it stopped at the 38% level and turned. We would have had our stop loss right here at the 786 level down here. All right. Price didn't even get to the golden zone in this scenario. It turned and headed all the way back up almost at the previous high. So if we do the math from the entry to where we at right now, from today, you are up 3,091 ticks plus the 1,800 that you already walked away with. So 3,091, multiply that by 50 cents. That's $1,545, but you got 3 contracts left. So that's 4,600 plus the 1,800 that you already walked away with. And now you up $6,400 in 16 days. All right. And you only risked $1,700. Now you don't have no risk on the table. It's a risk-free trade. All right. So that's a swing trade example that you can use. And obviously this trade is not over and the month is not over, and neither of the resistance or support level has been hit. So it's a high possibility that price will either break through this trend line and get up to this resistance level here, or resist this trend line and drop all the way down, form a double top, break through this neckline and drop all the way down to support. All those are possibilities. With the economy that we're dealing with right now and the world economic stuff that's going on, it's a possibility that it could double top and drop all the way down. And we'll be ready for that too. All right, we'll be ready for that too. So that is my swing trade strategy. And I would obviously, I'm telling you guys and I'm suggesting you guys to only use this with micro contracts. All right, this will allow you to put a lot less risk on the table, trade with a way cooler head, less stress, and you already have predetermined targets that are established based on a month-to-month basis. If you are able to trade in a way to where you have good pattern recognition and you're charting constantly and you're keeping up with the market and you're keeping up with the trends and what's going on, you can have a higher possibility of making money. And just because you don't catch the initial bounce down here doesn't mean you can't come in when price forms a buyer support level, which is here, and it's already signified by the monthly pivot. So once the monthly pivot got broken above, it came back and tested, boom, you establish your buy position today, Friday, if you're not afraid to hold it into the weekend. And because you're dealing with micros, you have a lot easier mind to or a lot cooler head to hold it into the weekend because you're dealing with micros, which are smaller contracts. All right. So that's that. And if you were to actually do it that way, your position would have been based on the fib again, swing low, swing high. All right. You get your buy opportunity around here, put your support level at top of the golden zone, and then your target would be the pivot. And even with that, you got a 3.778 risk to reward ratio. Go down to a smaller time frame. All right. Add the 50-day moving average. And you can see that worst case scenario, you get in for an entry there. And then you can tighten it up by bringing your stop loss right below that 38% level, right below that monthly pivot. And now you just turn that 3-to-1 risk to reward ratio into a 5-to-1 risk to reward ratio, right? 383 tick risk and a $2,100 potential gain. All right. So even if you came in late, which we always had, we passed halfway through the month, and you're doing a monthly trade. I'm just giving you that example to let you know that it's not one of those things where you have to catch it at the first of the month or the first 2 weeks of the month. You might not catch this opportunity until we pass the halfway point of the month, and you still can put yourself in position to make a good amount of bread. If it hits the target, multiply that by 50 cents, boom, multiply that by five. That's a $5,000 trade opportunity. That's, to me, that's a no-brainer. You know what I mean? And then you can have multiple take profits, take profit at the previous high, all right, and then take profit at the actual monthly resistance level, and it'll all work out for you. All right. I know some people in here. Anybody got questions? Anybody got any comments? Anything you want to touch on? Um, Go ahead and speak your piece. But other than that, appreciate y'all for joining. And that is a month-to-month swing trade strategy utilizing the monthly pivots. If you want to get to the monthly pivots, you could go to, this is TradingView. You could go to the indicators and you could type in pivot. You could type in pivots traditional. And when you put that on your chart, make sure you plug in the monthly, and then you could have the monthlies on there, and then you could chart it up however you decide to chart it. David Connor said, how do you set up your fib levels? Me personally, I only use the 38% level, the 50% level, the 618 level, and the 786 level. And for the Fibonacci extension levels, I use the 1.618 for my extension level. If you want to get those exact levels, go to courtsideTradingClub.com and you can sign up for the trading program. And I have a Fibonacci trading course in the actual Elite Trader program. And I break down my whole Fibonacci strategy, give you the setups, how I do the settings and everything, and you will have that. So Connor, I believe that you are actually in the Elite Trader program. So if you go into the user dashboard, sign in, you will see the Fibonacci trading blueprint. Watch those videos, and you will get the Fibonacci levels on how to set up the Fibonacci tool on TradingView, so you can get the measurements and keep up with what I'm doing. All right, cool. So appreciate y'all for joining, and I hope I was able to enlighten you and give you something to look at and something to utilize in the future. 2023, definitely a strategy that you can use to make some money a more passive way. All right, rather than active day trading every single day. All right, appreciate y'all. Peace.
still I'm 5'8". Crazy as I wanna be, cause I make it orderly. You can say I'm sort of the boss, so get lost. The brother who will make you change opinion. Your minions, I mean them when it's time to hit you from the heart. Once I get a piece of the action, feeling satisfaction from the street crowd reaction. Jump full guns when they feel afraid. Too late when they give in the kick, they get sprayed. Lemonade was a popular